Time now is 12:39 a.m. and today I literally got a question on what I trade and how I trade, and I thought, fuck it, I'll make it a video. Watch this or you'll be broke forever. Welcome to No Risk, No Porsche. Cause if you ain't taking a risk, you ain't getting no motherfucking Porsche. You ain't getting no motherfucking Lamborghini. You ain't getting no motherfucking Ferrari. So we're gonna take a risk and we're gonna see what we can get. I personally trade on Derive. It's not allowed in the US. You need a VPN to access it. So if you want to access it, you have to use a VPN. Now, the benefit to trading on Derive is the market never closes. I trade volatilities and indices. When I trade, I usually look for market participation and all types of things. But today I want to talk about an order block. Now, order block is a big part to my trading method. And order block is basically a candlestick pattern that indicates a potential area of strong demand or supply where the market participants are taking large positions. So I use an order block kind of like my confirmation before my confirmation. You see what I'm saying? I use an order block as a confirmation before my confirmation. When I see an order block, I get a valid order block. When I see a valid order block, I kind of get interested, right? When you see a valid order block, you kind of get interested. Now, this is why. The components or the components, forgive how I say things. Actually, don't forget me, because I'm me and y'all gonna love me. But the components that make up an order block, like, are very, very interesting to pay attention to. You should definitely pay attention to order block. Now, this is how you could tell a valid order block, right? They should always leave a gap or imbalance. You should see a gap or imbalance. Now, a gap or imbalance, also known as a fair value gap, is created when the wicks of consecutive candles don't touch, leaving a space between them. This gap suggests an imbalance in market equilibrium, indicating that demand or supply was not met at that level. We want to see an imbalance. When we see an imbalance, we know that we have a little bit of room to play. All right. Don't question me on the terms and all this and all that. I'm not a guru. I'm just here to educate you guys, and I'm just here to show that this is possible, like the name of the channel. No risk, no Porsche. No risk, no Porsche. I'm taking a risk, and hopefully we see what we get. You also want to see a break of structure. A valid order block is often followed by a break of structure, a break of market structure, either a new high or low, confirming the potential of a significant price movement in the direction of the order block. Now, as I'm speaking, you can see right here, or right here, I think I'm gonna put it right here, what I mean by a break of structure. I've indicated it right here while I was recording my video yesterday. That's what got me interested in the trade that I took. We want to see a liquidity sweep. Before the break of structure, there's typically a liquidity sweep where the price temporarily moves down to take out nearby orders before a strong move. We have that right here. We want to see a volume spike. Volume often increases during the formation of an order block as institutional orders are executed, signaling a strong indication of demand or supply. Now, when you have an order block like we do have here, and you see like a strong push to the downside or a strong push to the upside, that's what this means, a volume spike. You also want to have it unmitigated. A valid order block should always remain unmitigated, meaning the price hasn't returned to retest or fill the gap it created, like we see right here. When the price revisits the unmitigated block, it should react strongly indicating the remaining institutional orders at that level. Now you can see all this kind of start to take form, and right here is where you will place your short position. Am I saying that right? Yeah. Right here is where you take your short position and basically enter your trade. Right here, you set your stop loss, maybe a spread above the order block in case the wicks jump too high. But basically, you will take that, swing low, and this right here is a perfect trade. Right here is clear as day, and I thought this would be a perfect time to show you because it's still forming a third. So there's another chance to make money on this R10. This is volatility 10 index on Derive. So there's still a chance to make money on here. This swing low, a perfect swing low. I could have got more, but can't be greedy. Cannot be greedy. And yeah, we have everything right here. The liquidity, the breakup structure, we have the imbalance, we have the fair value gap, and we have the volume spike. This is a valid order block right here. This is another valid order block right here. And we have the same thing. We have the same thing, guys. So this is what we need to look for in the market. This is what we need to look for. This is what we need to pay attention to. And this is where most of the money is. This is where most of the money is. So again, an order block is a confirmation before the confirmation, right? The confirmation will be when it gets to that position again, or what gets to that level again, and you will be looking to see how the market reacts to that zone. But as of right now, before this forms, you have a valid order block. You pay attention, you watch the market. Whenever it comes back or it's reaching that point again, you set your short position for the swing low or a swing high if the market was flipped and it was a demand order block. See, right, order block. This is a supply order block, so we swing low. If it was a demand order block, we will swing high. Don't worry, bear with me, trust the process. I will explain more as I know more. Like I said, I'm not a guru. I'm not a financial master or nothing like that. You guys can ask me questions. I actually encourage questions because I could learn better and so can you guys. And if I don't have the answer, I promise I can find it for you guys. So yeah. Actually, a question is what led to this video right here. Somebody asked me a question, like I said, and that's why I'm making this video right here. So just trust the process, guys. Just trust the process. Of 2025. Trump up there tripping. Like, you got to take the good with the bad, and with the good, you just got to make some money out of it. So one more time, we have a gap or imbalance, which is what we call, or is mostly known as, a fair value gap. You look for a break of structure, you look for a liquidity sweep, a volume spike, and unmitigation. You look for unmitigation. You look for all these things, and you set your take profit below the swing low. You set your stop loss, a spread above the order block, and this is how we enter trades. This is how you have risk management. This is how you make money in stocks, not by impulse trading. Avoid impulse trading. No risk, no Porsche. No risk, no Lamborghini. No risk, no big house. No risk, no nothing. You have to risk, but we risk smart over here. Make sure you look for all these things when you are trading. Make sure you look for all these things when you are trading. This is a confirmation before the confirmation. The confirmation comes when it reaches this zone again. Remember, no risk, no Porsche, No risk, no Lamborghini, no risk, no mansion or whatever else you want to have in life. You have to risk something. You either risk your money or your time. You either pay with your money or your time. So choose wisely. Subscribe. Subscribe, like the video. This is not going to be the last video. This is not going to be the last video. Come on, babe. You fucking me up. You fucking me up. She over here smiling. But hey, never mind that. Never mind that. Make sure you tune in. Make sure you tune in. No risk, no Porsche. No risk, no Porsche.